Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of New York and London coffee markets.
Hello and welcome. Now, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these. My charts. This was all my own original work, as I think you deserve to have that. So with that, New York coffee. We can easily see from the action over September and October that the high at 429.5 from February this year continues to cap the rises since the beginning of the year. On the downside, the lows in September ended up being just ahead of the key 50% Fibonacci line for the important November 24 to February 25 move at 335.15. And back then it had pierced but not broken. Sorry, let me rephrase that. It had pierced but with the unbroken insistence of the mauve medium moving average, currently 358.80, a moving average that shows up again later 3 weeks ago as an excellent support. In truth, apart from that dip in November, we seem to have built a small base since late September on top of the gold long moving average, which is currently 357.80, and most recently around the green short medium moving average, which is currently 374 even. And also the 370 even level itself, I suppose. All these earlier actions higher left us with a number of interesting situations. Thus eventually drew and finessed a dark blue bearish mid-September to late October bearish shift pitchfork, which does fit for now at least, and which you can see on my daily chart. In this, the market today is in between the slowly declining dark blue middle tie below, currently at 361.5, and the dark blue upper tie and above, currently at 405.10. There is something else I'd like to look at here. And for this, I'm indebted to Ray Bradbury for asking me about New York coffee 36 weeks ago. And I went at the time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025, when I'd earlier reviewed the longer term charts. Is a multi-year 2012 to 2024 very large reverse head and shoulders bottom with a bright red neckline on my chart, on my monthly chart, which is currently at 277 even. The break higher over this neckline reached its primary target on the upside, but there was a secondary much harder to reach target up in the 433.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line here at 433.75. And that's quite close in the scheme of things. Prices did indeed turn lower, up at this key combination of the 100% projected Fibonacci line and the target of 433.35, dropping down through and closing below the important 50% projected Fibonacci line at 347.20. and below the high of May 2011 at 308.90. However, in July and again in August, the market started to form a base on top of the bright red neckline, a horn bottom if you will. August, with its monthly key reversal up, raced all the way upwards, and we saw an extension to that move up in early September, but not reaching quite as high as we saw back in February, and that's important, before dropping lower and setting up September as a monthly bearish harami. However, since then, prices have not carried on lower and indeed started to move higher instead. At least the closes have, though the monthly highs have still been lower. We had a combined bullish piercing line pattern and bullish double in October, and November's close was sort of follow through higher, though not in any spectacular way. Now, we have congestion between 371.25 and 375.75, and we're just edging out of that zone at the moment. We're roughly where we are, or had been. And now I also have quite a steep action, especially for a bullish shift pitchfork for the October 23 to August 25 bullish shift pitchfork. Here we are this month underneath the middle time, currently at 395.55. As I said 2 weeks ago, and I don't favour, and I quote, I don't favour this pattern much, but it is nevertheless still there. Meanwhile, on the downside, well, the real key will be the bright red neckline below. However, the old 50% projected Fibonacci line at 347.20 also looks interesting. I should point out one more final feature on this longer term chart. The possibility that we may form a very large bullish halfway hesitation or a possible bearish double top, with all the contrary implications both those patterns may have. I will not discuss this last point any further at this time, as it's way too early to just isolate which one it will be. It's way too early. But in all this, I ask you, please remember, these here on this monthly chart are longer term, in some markets, very long term patterns. London coffee. 30 weeks ago, I said of the bearish pressure on this market, and I quote, they now have the overhang of the market from roughly 5,300 to this year's high at 58.49 sitting above, end of quote. This overhang of bearish pressure and ammunition is important as it started back then to press down, heightening the breaks lower. The reactionary rise seen since early August pushed up through some significant resistances, now turned into supports, and more so these are some very keen ones at the time and relatively close to the market supports. Notably the trio below of the interesting 50% Fibonacci lines for the November 2021 to February 25 move at 38.08, the May 21 to February 25 move at 36.49, and the March 20 to February 25 move at 34.81. Then there is the congestion of the 61.8% Fibonacci lines at 41.68, 41.87 and 42.90. Now we have today pushed below these three and can start regarding them as resistances once more. Thus, most of these are moving away from being supports and towards being resistances, especially the last of these moving averages. The rising medium moving average currently overhead at 42.63. If we take a look a little higher, we have some significant further supports that are now once again resistances, notably the gradually dipping gold long moving average, currently 44.87, which eroded a lot of the bullish pressure. This recent move lower prompted me 3 weeks ago to draw a very shallow, bright red August to late October bearish shift pitchfork. The market today is now below the bright red middle time, which is currently at 43.10, and heading towards the bright red lower time, currently at 38.74. In between we have limited supports, primarily the late September lows at 40.48, which I think we're now below. Well, we're still above it. And 40.26, as well as the lesser Fibonacci lines at 40.40 and 38.08, plus congestion at 39.02. None of these look that great as supports, apart from the late September lows, and then only slightly. The bright lower time ought to look good, but it is untested during its whole lifetime. With a break above, below the mauve medium moving average last week, it now looks like the market wishes to explain the move lower.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.